Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday, made it to the end of the week, right? And what a week it was. We had the Fed come out and they announced that they're going to pause, right? And it was a weird pause because they say we're going to pause, but we're going to have 2 more rate increases. What's up with that? I don't know. I don't think they had the guts to raise it up here. And we'll talk more about that in a second, but it's just kind of weird to me. We're pausing, but we're going to raise it 2 more times. All right, so what's going on in the markets today? Well, the markets are slightly higher. Dow's up about 80, Nasdaq's up about 20. So this market is a runaway stock market, right? I mean, it's going to the moon. To the moon, I'm telling you. Look at, okay, there's an old saying, and it's a very good saying, right? And we sell in May and go away. Now, if you had sold in May this year, right, you would have missed out on, well, just since the beginning of May, the S&P's up about 10%. The Nasdaq's up about 15%. This is a runaway market. This is the best May and June I can ever remember. It may be the best ever in history, this market. All right, so what is this telling to me, though? What's it telling to me? All right, this is what it's telling to me. Now, when I used to manage money for my family, I ran money, okay, so I was a money manager for the family. Now, here's the thing. When you're managing money, all right, it's hard to beat the S&P. It's hard to beat the S&P over a long period of time. If you go over 5 years, less than 85% of mutual funds and about 85% of hedge funds underperform the S&P index. So the S&P index is kind of like, well, it's kind of like the guidelines, kind of like the bar. You try to beat it, but only 15% of hedge funds and their professionals can beat it. 15% of mutual funds, that's all that can beat it. Most of them lose money to the S&P. But here's the thing. If you just take the S&P, right? And if you sell May 1st, and if you get back in November 1st, so you're in the market from November 1st to May 1st, and you're out of the market from May 1st until November 1st. All right, you can beat the S&P consistently over a long 5-year, 10-year period of time. It doesn't do it every year, but most years it will beat it by at least about 50%. You can increase your return over the return of the S&P. Very fascinating, right? All right, so we talk about sell in May and go away because people know about this. People know that this is the bad time of the year, right? But we're having 10% up already in the S&P, 15% up already in the Nasdaq. Now, this is telling me that, hey, maybe it's not going to work this year, but I think it's still going to work. In other words, I think we're going to drop more than the 10%, more than the 15% that we've already ran up. Now, market sentiment has shifted. It used to be bearish just a couple weeks ago. Everybody was down on the market. Now it's bullish, but I don't really understand why this market's rallying so much. Is it a short squeeze, right? Is it a new bull market? Okay, maybe it's this AI thing that's taken over and we're just going to go straight to the moon. Maybe it's the Fed actually buying the market, right? Oh, but Mike, the Fed can't buy stocks. Look, the Fed has a trading desk, right? You can Google it. Google the Fed's trading desk. It'll tell you they have a trading desk that they actually trade with. Google the plunge protection team. It will tell you that it's a real thing. The plunge protection team in the Fed do actually buy stocks. I know that's shocking. A lot of people don't believe it. That's my take. So I'm not sure what's causing this big rally, but what I am sure about is it's not going to continue forever. I think we're closer to the end than we are at the beginning. And I do think we're going to drop by more than we've gone up. Now think about it. In the dot-com bust, right? Okay, it dropped 40%, but rallied back up 38% before it dropped 80%. Okay, that's very similar to what's going on right now. We've dropped down about 40% in the Nasdaq, rallied up about 37% right now, and I do think we're going to get a big drop coming. That's just my take. I mean, obviously I've got this wrong. You may want to listen to people that got this big run up right, and that's perfectly fine. You got to make your own decisions. I'm just giving you my take on the market. All right, so let's get over to the real estate market. All right, so now, as most of you I'm predicting a 50% pullback from the highs. Now, that's never been seen before. Nobody believes it's going to happen. It's impossible, right? I mean, the market, there's no inventory, Mike. You don't know what you're talking about. Now, personally, I think the real estate market collapsed in 2008. I don't think it's ever played out. Now, a lot of people are all excited because, they bought a house, let's call it the year 2019. They bought a house right before the pandemic and they got locked in at that 2.8%. All right, so they were locked in there and the house has gone up 20% a year, 20% a year. So about 40% up from where they bought in 2019. Right now, they feel really, really smart. They feel like they're a genius, right? They almost feel like they're Billy Bob is what they feel like, because it's exciting when you're making all that equity. But the only way to get the equity out is to sell the property, right? That's what Billy Bob did. He took his equity out and he got out. Now, if you stay in, that equity can get wiped out. It can go away really quick. It doesn't take everybody selling houses. A lot of people don't get that. They think, well, everybody's not going to sell their house, so I'm going to still have my equity. Well, no, you're not. If 2 or 3% of the people in your area start to sell their house, your equity is going to go away really quick. You see, it's kind of like a game of chicken. Remember the movie Footloose? They're on the tractor, they're driving, and the first one that jumps off the tractor, well, he loses. The one that stays on the tractor as long as he can before they collide. Well, it's like a game of chicken in the real estate market right now. You see, how long do you want to stay in before you jump out? You see, if you stay in, you are actually going to be the loser, unlike the game of chicken. If you're the first one out, you're going to get out with your equity. You're going to be the Billy Bob. You're going to get to go on vacation and wait for the market to come back down. Now, once again, this is just my take. You make your own decision. But look it, the real estate is sold on the margins, right? It's on the margins. The first guy that makes it out, he gets that high price. The next guy gets a lower price. The next guy gets a lower price. The next guy gets a lower price. And I call that a circling the drain motion in a downward pattern. Now, why do I say that we collapsed in 2008? We haven't recovered from that collapse. What we've done is we printed $20 trillion. And in 2009, they printed $4 trillion of that with the sole purpose of inflating the real estate bubble again. And they just kept printing ever since. So yes, we printed $20 trillion since 2008, and that's making the markets go up, making the stock market go up, making your house go up, and it's going to the moon. It's never coming back down. That's not my take. That's not my take. This is going to end bad. Look it, we got a problem. Let's talk about the problem. Okay, so you got a financial crisis going on right now. Nobody believes that. Everybody thinks the banking problem's solved. The banking problem is not solved. There's this thing called commercial real estate, right? And the banks are holding the paper on this. Most of the regional banks are holding the paper. And this commercial real estate is in a lot of trouble. It's got 70% vacancy rates, and the interest rates went from 3% up to 7-8% for commercial. They got to refinance every 5 years, and it's coming due. Just in the next couple of years, there's going to be $2 trillion. $2 trillion. Now, when these banks have to mark these assets down that they think they have these assets at 100%. And maybe the Fed will bail them out for a while at 100%. But if they do, look for hyperinflation. That's what's going to hit our country. Worst thing that can ever happen to our country. But there's $2 trillion that are in jeopardy. And when they have to mark their assets down, they no longer have your money. They no longer have the deposits that you deposited into the bank. So when the bank runs happen, and believe me, the bank runs are going to happen, banks are going to be falling over like dominoes. Now, I'm still of the opinion that we're going to see a recession. I think we'll see it by the end of this year. We'll see how that plays out. We'll definitely see it at the beginning of next year if it doesn't get here by the end of this year. But I think it's coming. I think the months of July and August, you're going to see a lot of these layoffs happen. You're going to see what's called the forced selling. People are going to be forced to sell their properties. But what we got going on is the banking system is a major, major problem. Look, the Fed's running this Ponzi scheme, right? All right, so we got 32 trillion in debt, right? They got 9 trillion on their balance sheet that has to be run off. So that's like over 40 trillion. Add another 150 trillion in unfunded liabilities. We're at 200 trillion. Now, none of this is going to get paid off. We all know that somewhere there's going to be a reset. I'm not exactly sure what that's going to look like, but I'm pretty sure it's going to be really ugly. Now, once again, I don't mean to be negative. A lot of people accuse me of gloom and doom. I just tell you what I believe. You don't have to believe me. You make your own opinion. If you want to listen to me, I think that's great, and I appreciate each and every one of you. You know, we had a record number of listeners on my last video. We went over 4,000 people. 4,000 people. I'm humbled and I'm grateful for that. But I mean, it's really something, right? I never expected more than 50 or 100 people to ever watch me. Over 4,000 watched the last video, and a lot of them gave me the thumbs up. Don't forget to give me the thumbs up today. It really helps me out. But I also want to talk about this. So, okay, we got this student loan debt coming, 1.7 trillion, right? Nobody's paying now because it's on a moratorium, right? It's been on a moratorium for 3 years. Nobody's paid, but they got to start paying in August. What's going to happen? It's going to suck billions and billions of dollars out of the economy, right? Because these people are now spending that free cash flow, but they aren't going to have that cash flow to spend anymore. It's coming, folks. The recession's coming. It's not going to be pretty. The forced selling's coming to properties. Now, everybody doesn't have to sell their property. You get 2 or 3% selling their properties, you're going to see this thing start to free fall. Now, look, I know I come out with these negative titles on my YouTube thumbnails, and today it said never before seen 50% crash. We've never seen a 50% crash. Yes, that's negative. I could have come out with a thumbnail and said, hey, maybe we're only going to go down 40%, but not as many people would watch that, would they? No, people want to hear the negative one. Okay, so that's my take. We could overshoot that 50%. It could get a lot worse than 50%. But what we got is like if 2 or 3% of the people start selling, this thing's going to crumble. It's going to crumble down. Now, in my opinion, right now, it's like the good times, right? It's like you can still get out close to what Billy Bob did. We got a stock market that's gone parabolic just in the last month and a half. I believe it's like dancing on the Titanic. We're dancing on the Titanic right now. These are the good times. Do I think they're going to last forever? No, I don't think they're going to last till the end of the year. I think like if you're thinking about selling, this may be a great time to sell. But once again, do what you want to do. People accuse me, Mike, he's just trying to get you to sell. He's a real estate broker. He wants you to list the house with him so he can make all the money. Yeah, that's why I got a YouTube channel, just so I can get to your listing. I love these comments though. Really, it's amazing to me. It's amazing to me. But we got a shift going on in the housing market. We got job losses coming now. Look, here's the thing. They're telling you that this job market, I mean, like it's like we're at 3% unemployment right now, and every month they create more and more jobs. Look at the first-time jobless claims. First-time jobless claims. Just the last 2 weeks, it was 266,000, 262,000. So basically 250,000 a week, which equals 1 million a month first-time jobless claims. And these are not low-paying jobs. The ones they're creating, those are low-paying jobs. Chipotle, man, they're hiring the burrito makers. They'll pay you up to $20 an hour. That's right, Chipotle. Okay, but that's kind of a lower-paying job, right? Okay, but the higher-paying jobs, the ones that are paying $200,000 a year, $300,000 a year, those are the ones that are going away right now. Those are the ones that are having first-time jobless claims. So the forced selling is going to be coming. It's just the way it is, right? It's going to be coming onto the marketplace. That's what's happening right now. Look, you can take my word for it. You don't have to take my word for it. I don't want to scare anybody. For some reason on Fridays, I always do, though. It's a little bit scary. I mean, I think we're going into a recession. I hope we don't go into a depression, but the way they're printing money, the way that they're spending foolishly, the way the interest rates are going up, It's got problems in this banking industry. A lot of problems, man. Banks are just making me nervous right now. You go into a bank and I mean, it's like you're a criminal. It's like you're John Dillinger walking into the bank. I just want to put some money in. But you got cash. You can't put cash in. Oh, okay. I mean, but it's like really weird. Try taking money out. Hey, I want to take $2,000 out. What? We got to get the manager over here to okay this. Mr. Mike, why do you want the money? Are you being harassed? Are you going to give it away? Are you being robbed? Why do you need $2,000 in cash? I mean, the questions are crazy. I don't trust the banking system. I think there's going to be a lot of bank runs. I think there's going to be a big credit crunch. When a credit crunch happens, people don't have money to get, well, they have money. Even if you have money, you can't get a mortgage. So what you need to become is an all-cash buyer. And there's a lot of all-cash buyers still out there right now, between somewhere around 25%, let's call it, of home sales. 1 out of every 4 is an all-cash buyer. Well, what happens? Well, they sold their house in California, got that big price. Believe me, Billy Bob's going to be an all-cash buyer when he comes into the marketplace. When he comes back, he's got cash. He's sitting on a pile of it. He's waiting. He'll probably pick up a rental house also. A lot of people have 2 and 3 homes. I know. They're like stockpiling homes. But I think it's coming to an end. I think it's going to reverse. I think it's going to come down. Yeah, 50% is a little bit scary, but that might be conservative. Anyways, if you like this stuff, give me a thumbs up. Why not? It helps the algorithm. Over 4,000 watched the last video. That was incredible. I couldn't believe it. I mean, I haven't even had one go over 3,000. We jumped right to 4,000. Anyways, get out there. Have a great weekend, everybody. I'm looking forward to talking to you all again next week. Bye-bye now.